Hey guys, it's Barry Page. Thank you for joining me in this short training video. We're going to discuss security and how you can maximize the protection of your assets, income, and life. Security is the third step in the financial success template. So let's get started. We believe that you are your greatest asset. Your ability to earn an income over your lifetime far outweighs any other assets that you may have. Not your house, it's not your 401k or any other money that you might have stowed away. The ability for you to earn an income over your lifetime is huge. So there's a lot of misinformation out there in the marketplace. Many of the financial gurus, even CPAs and financial advisors will tell you that you might need 1, 2, 5 times your income to be secure. But if you think about that, that's 1 year of income, whatever that might be, 5 years. How are you going to live the rest of your life if something happens? And most retirement plans fall short during retirement. They actually decrease the amount of protection that you'll have during retirement. Proper insurance is the foundation for any solid financial plan. If you think about it, we protect our cars and our homes typically to the maximum. But when you take a step back and really examine who is that protecting, it's the lender. The financial institutions require us to have insurance on our cars if we borrow money or on our homes if we have a mortgage. On the other hand, life insurance and disability insurance are a matter of choice. But if you have anyone that depends on you for your income, you should protect it with life insurance and disability insurance. You can't invest yourself out of a disability or an untimely death. So there's a lot of misinformation out there. Many of the so-called financial gurus, entertainers, I like to call them on the radio and TV, will tell you to protect yourself with 1, 2 times, maybe 5 times, or 10 times even, if they stretch it, your income. However, when you really think about that, if you lost your income at say 35 because of a disability, you're probably still going to live another 30, 40, 50 years. Personally, I know this because my father was disabled in a car crash when he was 38 years old. He lived another 30 years. He had to have a full-time nurse, and it just about bankrupted our family. So you want to make sure that your income is protected. Many typical financial plans fall short during retirement. They actually decrease your protection and increase your risk as you get older and enter retirement. Expenses may be less during retirement, but rarely will they offset the drop in income. Let's take a typical couple. If one of the spouses should pass, at a minimum, the other one will lose that Social Security income. And if you had life insurance, the life insurance could replace that income and provide supplemental income. But one of the huge advantages is that income can be tax-free and can be configured so that it does not affect your provisional income or your Social Security income, so you can maximize that amount and minimize the tax impact. So let's take a look at what that would look like. I've got a couple scenarios here on the board, and we're just going to examine how much money you will actually earn and what your wealth could grow to over your lifetime. Your income potential represents the actual money you will earn over your lifetime from various stages. Your wealth potential is what you would earn on your money and what that money would grow to if you were able to invest all of the money that you made. Now, I know no one's probably going to invest or save everything that they earn, but if I could help you recover, say 10% of the money that you would normally lose, then that could have a dramatic impact on your wealth potential. So let's take a look at these numbers. So your earnings and your wealth potential. And we're going to look at it at different ages, 25 years, 35 years, 45 years old, and 55 years old. And we're going to take a retirement age of age 65. What this is going to look at is assuming that you got a 3% raise, okay, a cost of living raise every year, and you got a 6% return on your investment, okay? So at 25 years old, if somebody were earning a very conservative $24,000 a year, and they already had $6,000 in their savings account, then their income potential for the rest of their life would be $1.8 million. Okay? That's starting out with a $24,000 salary. Their wealth potential would be over $6 million. Now let's say you might be later in life. Let's say you're 35 and you've got a few raises over that time period and now you're making $40,000 a year. You had $50,000 in savings. Your income potential until age 65 would be $1.9 million. And had you been able to invest that money, the wealth potential would be $4.8 million. That's huge. Think about that for a little bit. $4.8 million from 45 to 65. And the income that you would earn would be nearly $2 million. So let's say you're a little later in life and you're 45 years old. Now you've got a few raises and you're earning $60,000 a year. And you've already got $100,000 in savings. This person, the income potential just between 45 and 65 at $60,000 a year would be $1.6 million. And the wealth potential would be $3.2 million. Now you might say, well, I'm a little later in life, I'm behind the 8 ball. Well, wherever you are, you have to start where you are. But if somebody were 55 years old and they were earning $96,000 a year, the income potential would be $1.1 million. And if they had $250,000 in savings, they had been saving all along, their wealth potential just over that 10 years would be $1.6 million. So as you can see, your earnings and wealth potential are huge. We should not discredit those. We should protect them and make sure that they're secure. So take the time now to review your income and review your insurance policies. Are you protected in the event of loss? I want to thank you for joining me here today for your complimentary review. If you want to take a look at your situation, just go to my website, legacyinsuranceagency.com, legacyinsuranceagency, all one word, .com, and you can schedule a meeting, a complimentary meeting. There's no charge or no obligation, and we will walk you through a process that will help you ensure that your income and your wealth are protected. Be sure to like and share this video if you feel like you gained some value from it. And you might want to subscribe to our YouTube channel, Legacy Money. So I'll see you in the next video, and I'm going to leave you with this quote. It's from one of my favorite authors, Dennis Wadley. He says, "Time and health are two precious assets that we don't recognize and appreciate until they've been depleted."